Last week, the S&P made a new all-time high. What that means is that every decision to sell over the last 50 years has been a bad decision. I mean, I don't know how else to put it. And every decision to buy has been a good decision. And every decision to buy when everyone else was panicking has been a wonderful decision. That's the story up until now. Could we go to a place where risk is no longer rewarded and falling markets never bounce back again? I suppose it's possible. Is it likely? No, it's not likely.
Welcome to a special in-person episode of the Julia La Roche Show. I am joined today by Josh Brown, CEO and co-founder of Ritholtz Wealth Management, author of the new book, You Weren't Supposed to See That. Josh, we've known each other for a long time, and I
wanted to ask you.
Yeah, ask.
Do you say every episode is special?
No, this one is special, though.
Okay,
maybe I had said that for Scott Galloway when we did it in person. He's special, yeah.
Scott's special.
Yeah, both of you guys. And I liked your episode with Scott back over the summer. But we've known each other for a long time, over a decade now. Crazy.
More
than a decade. 2011. Yeah. So yeah. Whoa. Wow. Whoa. Way over a decade. I can't even do math. But anyway, I'm so excited to finally do an in-person with you.
Me too.
And one of the things we always do with the show, before we get into the book, is we just kind of start with the big picture, the macro view, the state of the economy. We could throw markets in there. Where are we today from your vantage point? And one of the things about the show, Josh, is you can take all the time you need to set the table.
Well, it's a really interesting time because if you just read the front cover of the Wall Street Journal or the New York Times, it is the most terrifying time I could remember, maybe of my entire adult life outside of the 9/11 era. We literally are looking at the potential for all-out war on two continents, and nobody really seems to have a good handle on how much worse these conflicts are going to get. If you only look at the business section of the Wall Street Journal or the deal book page, front page in the New York Times, you would think it's the greatest time ever. Yesterday, let's start last week, the S&P 500 made an all-time record high. Yesterday, there were 63 companies in the S&P 500, so almost a fifth, making all-time record highs. There were 0 new 52-week lows. You've got this record-shattering amount of money in U.S. household savings, like of all time ever. We've got a shortage of homes, and now you're going to see a lot more activity because mortgage rates are coming down. And it really feels as though anyone who wants a job has a job. It's been an incredible period of time to be a regular person, living, working, building a company, building savings. And it conflicts so starkly with what's happening on the global stage. And so it's like this kind of cognitive dissonance, and nobody really knows, should I be more worried about like events in Eastern Europe and the Middle East, or should I be more excited about how well my career is going? I just got a big raise. My home price has never been my home value has never been higher, and my 401k is bursting at the seams. Like, how should I feel about all of this? And I know the answer is specific to each person. And that's what's creating that really interesting dynamic. And I haven't quite figured out which way it will resolve, of course. No one else has either. But that's where we sit today. Yeah,
you're kind of getting at the psychology of it, which is a theme that has come up. You're pointing out that there's like a dark picture, but then there's like this, all-time highs. But no one ever really celebrates, as you point out in the book, like no one ever celebrates, yay, we hit all-time high. It just kind of isn't a thing.
No. Because we don't celebrate 72 degrees and sunny. Like if you live in San Diego and you say, well, what's the temperature? Guess what? 72 degrees and sunny. It's like, oh, all right. Well, I guess that's what it's supposed to be. It's perfect. And if you're a visitor there, you're really excited about it. But if you live there, that's what the market has been for most of 2023 and so far all of 2024. And so nobody is like, woohoo! Like nobody feels like they just made an extra $1 million in their retirement account, even though they did. So that's kind of like the state of what it's like to be an investor these days. The headlines are horrendous, but the actual performance of their investments is world-beating, incredible.
So what do you think the takeaway is then? Like stay invested then?
Well, I think the takeaway is that financial markets don't always behave in accordance with the way that you think they should, based on what you are most concerned about or what the news of the day is. And that's, it's really hard to process that markets are sometimes paying attention to geopolitical news and then sometimes not. And how do we know which is which and when is when? This is really difficult for investors to wrap their heads around. I think you need like a decade or two of experience, and you need to see a few of these things play out to understand that sometimes the reality of the world is not reflected in markets. And sometimes there's a very cold calculation being made on the part of investors where they say, you know, it might be the end of the world. It might also not be the end of the world. And if it's not, earnings are going up next year. Interest rates are coming down this year. I need to be invested.
Mm-hmm. Okay, so let me ask you this from the mindset perspective, because you write in the book about you have an abundance mindset. There's abundance versus scarcity. I would love for you to frame that up for the folks. But I do want to explore a bit more of the abundance mindset and how that relates to investing.
So the abundance mindset is basically like there's enough room for everyone to do well. I don't view the world as me versus someone else. It might be that way, maybe on the surface or even beneath the surface. I don't have that mentality. So I'm very expansive in what I do industry-wide. I throw huge events. We had 4,000 plus financial advisors come to Huntington Beach, California last week. Feels like it was yesterday and a million years ago. And do we all compete? Like maybe technically like an advisor has to choose between us and 3 other firms, but like there's so much opportunity that none of us should feel like we're at each other's throats. So that's the way I act within my professional space, within my career. And I apply that same thinking, not on purpose, but like just almost instinctively to the way that I invest. I think that things generally get better. I think that opportunities generally lead to gains for a portfolio. I know that companies rise and fall and this stock falls out of the index and this new company comes along and replaces it. I understand that, but I feel that if you're broadly diversified and you're invested and you're taking risks that other people won't take, you will be in the fullness of time rewarded for those risks. That's an abundance mindset. A scarcity mindset is, you know, that person is having more success than I am. Therefore, that's my antagonist. That's my enemy. I need to take something from that person because the pie is only so big and I need my slice to be bigger than it is. I know a lot of people with that mindset. I can't relate. I don't identify with it. And I think my career has gone better because I've been able to think in an abundance way and not constantly compare myself to other people or think that I need to beat someone else at something.
You know what? The most successful people I know, I think you're tapping into it. They have that abundance mindset. Like they cheer other people on. They cheer their success on. They don't just look at it as like, you know, sum zero game. And when I look back at like even your career, and you write about this in the book too, like when you started out blogging back in the financial crisis, you were actually linking out to more folks. And that mindset has really paid off in a major way.
Yeah. So in the early days of blogging, the big thing that every blogger did was link out and have a link fest maybe. Like, here's the thing I wrote today. And then later today, here's all the other stuff I read from other people that maybe you would get value out of. That was like the blogger culture, so to speak. And the successful blogs were blogs that both linked out and were reciprocated with inbound links. That's all dead now. But like, that was my mentality in 2008. It's like, I wrote something that I think is really good, but I'm not an expert on every subject in the whole world. So here's this other person that wrote about the latest housing stats. And here's this other person who's an expert on market volatility. And here's someone else who is writing about the new investment that she's making. And doing that on a regular basis, spreading love and helping others, it comes back to you tenfold. I believe that. So it's not religious. I don't use the term karma. I don't even think karma means that. We just, like, Americans have bastardized that term. I know it means something else religiously, but like I've always been somebody that thinks that everyone is uniquely good at something. And if we all help each other, there's more opportunity than if we try to snipe at each other. And I would take what you just said a step further. Most of the people I know, not all, but most who are successful have some version of what I've just laid out. But the converse is also true. Yeah. Almost everyone who thinks in terms of me versus you and I'm coming to get you, none of those people go anywhere. they're all still doing the same thing they were doing 15 years ago. So they might be selling newsletters or, whatever, not, but they're still playing the same game they were playing. They haven't evolved. They haven't advanced. And it's crazy to me. It never occurs to these people, like, maybe if you weren't such a dick all the time, like, things would have gone better for you. So I try to surround myself with people who think the way that I do, and that includes you. And I just think life is better that way when you can root for other people and they're rooting for you.
Yes.
It's hard. I mean, it's not always easy. Sometimes you're jealous. Sometimes you say, oh, I can't believe that person got that opportunity that should have been me. Okay. But like being able to move past and just like look at someone and be happy for what they're accomplishing, like I get a really good feeling from being able to do that. And I hope people feel that way. I know people feel that way about me.
Yes.
And I think that's like, I'm not going to say that I'm successful, but like the key to any success that I might have had is incorporating the success of others.
Okay, well, you made a lot of us feel really cool when we were like young bloggers back in the day.
Cool.
But when you linked to us, it made us feel cool. Okay. We were like nobodies back then, but it was awesome, and we appreciate the love. One of the things I really admire about you, Josh, is just your story and how blogging led you to Barry Ritholtz, and the story you can tell the story, but it was about you were cobbling together, I think $500 to go to a conference, and that's how you met Barry. Could you tell that story? Because to me, that one resonates so much. Yeah.
So I know you have incredible guests who have had these amazing careers. So I don't want to compare myself to them, but from where I started, I definitely overachieved relative to what I ever thought I'd be able to do and what anyone else ever thought that I'd be able to do. And the reason it happened, like one of the main things that I learned to do as a nobody with nothing going on was to take risk. And I had an opportunity to meet Barry in 2010. I had no money, but I knew like Barry at that time is a huge celebrity in finance. And I knew if I could just talk to him, he would something would happen. I don't know what, but I just felt like for whatever reason, I have to do this. Like I felt like the universe was telling me to do it. I couldn't even afford a round trip plane ticket to San Diego and back. I don't know why we keep talking about San Diego. But I had to get to Coronado Island. So I went to my father-in-law and I'm like, look, I don't know how to explain this to you. I'm not making any money. I have a 2-year-old and your daughter's pregnant. And like, I know how bad things are. I have to go to California. I have to go meet this guy because I feel like I'm in I have a lot of momentum going in my market commentary, but my career is a zero. And it worked. I met Barry. Barry had the opposite problem that I had. He had everyone in the world wanted to give him money to invest, and he's not a financial advisor.
Yeah.
I am ready to invest for people, but nobody wants to talk to me. So we meet each other. We have a very similar ethos about like how clients should be treated, how money should be allocated, how investors should invest. And by the time I've flown back to New York, I already have voicemails like, hey, you got to come check out my firm. And the rest is history. So taking a chance, and when an opportunity comes up, like recognizing it for what it is and doing whatever you have to do to capitalize on that opportunity are probably the two lessons from that story that I think anyone can take away.
This episode is brought to you by Public.com. Public.com has just announced its new bond account, offering a 6.6% yield on your investment until 2028 when the first bond matures. Here's why it's interesting. Bond yields have been at their highest levels since 2009. However, the Fed just announced its first rate cut and more are on the table. In fact, current estimates from the CME FedWatch suggest rates may fall as low as 3% by the end of 2025. The good news, investing in a diverse portfolio of corporate and high-yield bonds could lock in today's historically high yields, even if the Fed cuts rates. That's why Public.com created the bond account. It's a new way to invest in bonds and earn a 6.6% yield on your investment for the next 4 to 5 years. Go to public.com/Julia to learn how to lock in a historically high yield on your portfolio. The bond account, only at public.com/Julia. I literally, maybe I'll read it. I don't know if I'm going to read the whole thing, but I have a journal entry. You're in it. Story.
What year is this?
This is March of 2024. So it wasn't that long ago. It was when I was starting out with the pod. I was not making any money. I just said like something like, keep going. What a week. I won't name names, but invited me to a CEO dinner. And I said, I literally scrounged together some money and bought the plane ticket and a hotel on Hotel Tonight. Josh Brown once told me on the podcast how he had to cobble together $500 for a conference he could not afford so he could meet Barry Ritholtz. Talk about a return on investment. And then I just talked about like how I was really nervous to be in the room and that I only made $1,042 in the last 28 days. And I was talking about like how that was such a learning experience. I won't go in the whole thing, but it was such a learning moment for me, and like not being, oh, I'm not good enough to be in the room just because I didn't have, my podcast wasn't making any money then.
Well, that's a whole other thing, like imposter syndrome. Like, do I even deserve this? Do I belong here? Mm-hmm. So I don't have that. I know a lot of people suffer from that. I think it's because where I'm from Long Island, but I'm not just from Long Island. I'm from the South Shore of Long Island, and I get into this in the book. There's like a mentality amongst the people in the place that I come from and still live, by the way, where it's like, what do you mean I'm not good enough?
Yeah.
There's like this kind of bridge and tunnel striver ethos. We're like, we have no shame and we go after what we want and nobody tells us what we're qualified to do or where we belong or where we should be. And I kind of like that. There's a lot about where I live that I don't love, but I kind of like that my kids have now grown up in that subculture of the New York metropolitan area. We don't take shit from anyone. And it's not that we're always qualified to do everything, but we're not afraid to try things and go after things that we want. And so I never really had that imposter syndrome thing that you're talking about. But I totally get it. And I probably should have had it. I probably should have had it. I wasn't smart enough to know that I didn't belong doing some of the things that I got to do.
It's funny. It dissipates though, like once I'm in the room. I'm like, oh, wait, everyone's just a human at the end of the day.
So by now, you've met everybody. Like you've met Ray Dalio. You've met the best who have ever done it. And they've talked to you. They've looked you in your eye and answered your questions. So you know you're good enough to talk to anyone. I feel that way. Like I've met almost every great investor. I've gotten notes from people where it's like, holy, this guy's reading my nonsense. So you get over that after enough time. You get into enough rooms. You see enough behind the scenes stuff like, oh, I see what's going on here. This is a billionaire hedge fund manager, but basically he's here to like pump his losing trade on TV. Like you see that and you're just like, you know what? These people are all human.
Yes.
They have flaws just like me.
Okay. You know what I think of you as? I think of you as kind of like the truth teller on Wall Street. Like you're just going to tell it like it is. I
hope.
Yeah.
I think when you come from the outside and you don't have any, all right, so this is important. My entry to Wall Street was very unglamorous. I started out in the boiler rooms. I was cold calling. I would have to make 500 phone calls a day to get paid $250 a week. And everybody hung up on me. And I did that for a really long time. And I really didn't become an investment advisor until like 10 years of doing retail transactional brokerage and not really helping anyone, myself included. So I had failed enough that like a fearlessness and a nothing to lose element sets in. And you say like, all right, I'm nothing special, but if I pretend that I am, it's a place coming from a place of weakness. So if I just own it, like my blog is The Reformed Broker.
Yeah.
And my first blog post is, I just spent 10 years working in a bucket shop. Like, so I started out that way. So once you rip the Band-Aid off and you stop pretending to be something that you're not, it is a freedom. And I think it allows you to do your best writing, your best work, because you're coming from a really honest place. If you're starting out and you've had like PR and publicists and they're like dressing you up and emphasizing only your positive qualities, you're kind of like stuck there as your starting place.
Yeah.
You're not going to be like, oh, and by the way, you're right. So none of this is, here's the point. None of this is by design. There's no premeditation. It's just how the chips fell. And so I was given a hand with nothing good in it. And I think I've like improved my situation just by being who I am.
Yeah.
And I think there's a lot that people could take away from that. And I hope when someone reads the book, it's not like how to buy stocks. That's not what I'm doing. I'm trying to make people feel better about the starting point that they're in or wherever they're at. And then like, here's how to move forward.
Exactly. That's such a good way of putting it. When you close the book, I learned something about you that, one, I never would have thought to ask, because you talked about you failed out of college.
Yeah.
You tell this story and how that left a strain on the relationship with your parents, how important your in-laws have been, how important your wife has been in your life as well. But I never would have been like, oh, Josh, what's your pedigree or where did you go to school? I think people don't really ask. But talk to me about that chapter in particular and the closing of the book and that time in your life.
So the last chapter is really the culmination of everything that I'm saying in the book about. So the through line of the book is that everyone's human. That's like, if you ask me to sum up what's the book about, yes, it's money and investing and all these like amazing things that have taken place that I've documented live. But what I want the takeaway to be is like, all of the people involved in these stories are just people. No matter how successful someone has been, there's a backstory that's not glamorous. Or no matter how badly someone messes up, they might have been coming from an honest place and like had good intentions. And I think that's like the through line for the whole thing. So I end the book with my own story. And, the idea is like, all right, so I don't think my parents did a great job, frankly, with my education. They didn't seem to care much about it. And I tell the story, again, where I came from. There weren't a lot of professionals around. And a lot of people doing very well financially, but they weren't doctors and lawyers. They were hustling. They were business guys. They were small business owners who every day had to come up with a new way to make more money. And they did. And that's the world that I came from. There wasn't a big emphasis on like, oh, you should go to Ivy League school. Not that I could have, but I definitely wasn't pushed. And so I tell the story of what I want to do with my kids. And I want the opposite for them. Not because getting a 4-year degree or a graduate school degree is like the be all end all. We know thousands of amazing entrepreneurs who dropped out of Harvard and blah, blah, blah. But a lot of doors are closed to you if you don't do that, like as a minimum in today's society. So it's really like me reconciling, how did I end up spending 10 years cold calling in a boiler room? Like what led to that? And then how do I make sure that my kids have more doors open to them than I did? And so that's how I wanted to end the book on, like an uplifting note, that I'm going to break this cycle and I'm not going to have my kids be in a situation in their 20s where like there's nothing that they can do and they have no idea how to build a life for themselves. So I don't look back and say, oh, I wish this would have, I wish that. Everything's worked out great. I'm okay. I'm 47 years old. It's enough crying about my early 20s. Nobody wants to hear that, and nobody should feel bad for me. But now I'm a parent, and now I'm in the place that my parents were in when I was a teenager. And so it's like highly personal to me, and I wanted to like really do it justice and give people that. And again, the idea is like not, oh, everyone should know more about me. It's not that interesting. It's really like, how does this make you feel about your situation?
Yeah, well, I think that's the other point is like people see you on CNBC, they see the success you've built over the years, but there's that backstory too that comes with it, and I think it's a great lesson for a lot of folks out there. So
my first book, which I told the boiler room stories, yes. Backstage Wall Street. It's already 12 years.
That was 2012. I remember going to that launch party.
So in that book, I basically I had been blogging for 3 years. And I'm like, you know what? Somebody's got to do the definitive, like, this is what it was like being a retail broker. So I did it, and I didn't make any friends. Fortunately, most of the people that I had been writing about, they're not even brokers anymore. They're like now they all do small business loans. They were doing mortgages. It's like a dying or a dead thing. But
and the bosses, a lot of them got in trouble or did crazy shit. Yeah.
Right. So I don't use like people's names and go after anybody, but it's just like, this is what the world was when I first started in the business. And having done that so early in my career, I don't think that I really did it justice to the extent that I can now. Like I can really look back now and pick out like more important stuff from that era. So I did want to, I wanted to revisit Backstage Wall Street without like rewriting it. So I think I pull it off in the book.
Yeah. All right. Let's revisit some of the other parts of the book. We had you on this show. It was episode 20, and it was that kind of amazing, I don't even know how many words the blog post was, that really long like anthem of, it was actually called You Weren't Supposed to See That, that blog
book
post.
For that. Yeah.
Right. So fast forward 2 years since you wrote that. Where are we today as it relates to, it was almost like you're kind of exposing the American dream does not really work at scale or like.
Yeah. So the premise of You Weren't Supposed to See That as a chapter in the book, and that idea, I looked at the social experiment that we ran from 2020 through the end of 2022. And basically what we did was we made it so nobody would fall behind on their bills, regardless of whether they were working or not. And no business would have to lay anyone off. We basically, for the first time in American history, made it so every single person had enough money to do whatever they wanted. And it broke the economy. The American dream doesn't work unless there are people who have to do something they don't want to do because they're in pursuit of their dreams. If you just give everyone the freedom to spend their days as they please, people don't show up for certain jobs. Employers can't hire people for what they deem to be a reasonable wage for that role. And everything grinds to a halt. Supply chains, service. We have a service economy. It's 70% services, 30% goods. You can't get goods and you can't get services. Like you can't get people to show up to fix something in your house. You can't get a car lease for a reasonable amount of money. Like everything breaks all at once. And we had this once in a lifetime bout with inflation as a direct consequence of the fact that we made it so anyone could do whatever they felt like doing. Even if they had a job, they didn't actually have to go to their job. We had people working 2 full-time jobs at the same time. And then we had people that just stopped working entirely and left the labor force. And the economy could not weather that much widespread prosperity all at once. So it was a mirage. So that's what that book was about. It was like we all ran this experiment, not on purpose. We were kind of forced into it. And the result of that experiment is everybody can succeed in America, just not all at once. And that was kind of like a shocking revelation, I thought. And I detailed all the financial aid packages and all the stimulus and all the things that contributed to that really weird moment in time. Where are we today?
Yeah.
That's largely subsided. People are back to work. JP Morgan and Goldman Sachs want their people in 5 days. Amazon wants their people back in 5 days. You'll see government agencies start to mandate that. I talked to a friend of mine this morning who's a commercial real estate broker. He said business is booming. Not only do companies want to invest now in office space again, they want trophy office space. So when they bring their people back, they're excited to be there. This is a crazy thing that's happening. So that phenomenon has largely petered out. We've seen the excess savings of the pandemic era now be spent through. So things are going back to normal. It's not all good. You have the people in the bottom fifth of the country in terms of income are struggling because now they have high prices and they're not getting another raise the way that they were 2 years ago. So it's not like great for everyone all at once, but that's kind of like what's required.
Yeah. Okay. So as someone who is on financial television on CNBC, and I imagine you also get to interview a bunch of the guests too.
Yeah.
My channel, we have a mix of viewpoints who come on. We have folks who are bearish, bullish. It goes back and forth. There is still a narrative out there that some folks are still expecting a recession or think we're headed that way, or they're not so upbeat, or they think inflation's still a problem. I'm not the one to say. I'm more of the one who asks the questions. I'm definitely not the financial expert here. But what do you think in terms of narratives that you hear out there in the financial universe that you're like, no, that's totally off, or that's wrong, or just do you have a viewpoint on any of these?
All right. So last week, the S&P made a new all-time high. So what that means is that every decision to sell over the last 50 years has been a bad decision. I mean, I don't know how else to put it. And every decision to buy has been a good decision, and not like based on my opinion, mathematically. And every decision to buy when everyone else was panicking has been a wonderful decision. That's the story up until now. Could that change definitively forever? Could we go to a place where risk is no longer rewarded and falling markets never bounce back again? I suppose it's possible. Is it likely? No, it's not likely. So we think that risk and reward are linked. It's not our job to protect investors from every risk under the sun. It's our job to explain to them which risks they get paid for, which risks they don't get paid for, and to make sure that they're taking the appropriate amount of risk given what they say their objectives are. We don't guess at S&P targets. I can't tell you if we're in a recession next year or not. I laugh at anyone that says with certainty that they can. That's not my job. I have to get people to a place where they can afford the things they want to spend money on 10, 20, and 30 years from now. That's my job. And that involves helping people take the right risks and the right amount of risk, more importantly.
Yeah. You opened the book with, it was just own the damn robots. So the FANG stocks, the tech stocks, kind of investing in your own destruction, if you will, if you're on Wall Street.
So I think I said that in 2016 originally. And then I revisited that concept. So I said that like 5 years before anyone was talking about generative AI. Mm-hmm. But everything I said is even more true today. This idea that like the pros were looking at people in 2016 who were buying Amazon at an all-time high and buying Apple. They're saying, oh, you're so dumb. You think just because the iPhone is popular that automatically makes Apple a good investment. Or you think just because your company runs on Microsoft Cloud that automatically means you should own Microsoft. And you think because you're a Prime member at Amazon that Amazon's a good investment. Actually, that's literally how it turned out. And retail investors, I think, had an edge. They knew better than the pros. They weren't caught up in what's Amazon's PE ratio. They knew that they were going to spend a few $1,000s on Amazon every year for the rest of their lives. And they bought the stock, and it didn't matter what they paid for it. They made tons of money. And the same could be said for just tech in general as a category. It's outperformed everything. So sometimes the crowd is smarter than the naysayers and the pros who think they know better. And this is one of those cases. The idea of just own the damn robots. Basically, you've got, 500 prominent technology companies in America and around the world that spend every waking second figuring out how they can make businesses more efficient. And in many cases, that means paying you less or zero as an employee. What do you do about it? Well, if you can't beat them, join them. Maybe it's best to just invest in tech.
Yeah. So you've also talked about when there are periods in the market when there's sells, like the importance of the financial advisor role. I know you had some rules that you shared for during these periods. Like, I'm here to remind you.
Yeah.
Take us through like those periods and how you keep clients, I guess, more calm during periods of those, like more periods of volatility, if you will.
So we've kept clients invested through some of the big calamities over the last 11 years since we started the firm. And I think we do this really well. When things look their worst, we are willing to stand up and say, yeah, this sucks, but the sun will come out. And not only should you not be panicking out of your long-term investments, you actually should be finding ways to put more money in. We've done it time after time publicly, and we take whatever shit people want to throw at us, and we're still standing. And more importantly, our clients are successful investors as a result of the message that they're receiving from us. And a really great example of that is the end of 2022. At the end of 2022, I remember there was a survey of 100 CFOs or 1,000, unanimous recession in 2023.
Yeah, and The Economist as well. That was the consensus base case. Yeah,
nobody said no recession. The only question was how long will it last for? How bad will it get? And what will the authorities do to counteract it? It was definitely happening. The stock market had just fallen, I think 27% peak to trough, finished the year down 20%, the S&P. The bond market fell 18%, which is the worst year maybe ever. Might be the worst year in history for the bond market. For a combined portfolio of stocks and bonds, I remember somebody did the research report. It's the worst year since the 1700s. Okay. In that moment, it's really easy to say, this is broken. Don't invest. take your money out, do something better like crypto. God help us. It was the wrong advice. The right advice was, hey, listen, you've just survived the worst year for a 60-40 portfolio of all time. This is when you want to really start investing and really get some money in. And that was the right call. Obviously, we didn't know it would be, but common sense, it felt like if everyone is saying now is the worst time to invest, now is a recession, blah, 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 it's probably the time that you should be getting more optimistic. And of course, that's what turned out to be true. Our firm roughly doubled in size from the end of 2022.
4 billion AUM, I think now.
We're over 5.
Over 5? Okay. Well, the so Jack in the Book says
our last
over 5.
We're growing fast. Our last ADV was 5 billion.
Nice.
And it's actually higher,
Congrats.
but I can't say the number until we file another one. But the reason why is because we're helping people. We're giving people good advice. We're making sure that they are not running away when things look the scariest. Unfortunately, what comes with that territory is having to stand up when there's a drawdown and having them keep the faith through that drawdown that the risk they're bearing will pay off. And it's hard. The way that we do it is we tie their financial plan to their portfolio. So if and when we do have a client who's like, look, I understand all the rational arguments for not selling, but oh my God, I can't take it anymore. I can't, because remember, we're in the media. We talk about percentage gain and loss. For these people, it's dollars. Like $5 million portfolio with an S&P drawdown of 20 and a bond market drawdown of 18 is in a 20% drawdown. Okay. I just lost $1 million. I can't take it anymore. The thing to keep in mind is that's a very easy conversation if you've done financial planning work with that client. So then it's like, okay, let's pull out the plan. These are the goals that you said were important to you. Tell me which of these we should throw away. We don't want to do anymore. Do we want to get rid of the ski house that you think your grandkids are going to come to every winter to ski with you? We cross that out. No, don't cross that out. Okay. What about funding the college education of those grandkids? Do we want to pull that off the list? That's $250,000 per kid. You have 5 grandkids. You want to take that $1.25 million off the table? We just won't do that? No. Don't cross that out. Okay. So when we get to this place, it's like, well, this is why you're taking the risk that you're taking. It's not random. We have tied the future liabilities that are going to fund these goals to the present portfolio that you have. And that's where we came up with this allocation. So if you want to start lessening the things that you want to do with the next 30 years of your life, okay, we can have that conversation. It's part of our job. But if you don't, then you've got to go by the advice that we're giving you. And you cannot panic now. And when we had those conversations with people, these are smart people. They're not children. But when you break it down for them in dollar terms, why they're taking the risk they're taking, there's a higher likelihood that they're not going to do that thing that knocks them out permanently, that they're gonna persevere. And I view what we do in almost like religious terms. We have to stick with the thing that we said all along. We can't abandon what we said is the religion right when things get the most inconvenient. And so when people like, well, what do you do? Like you buy like ETFs for your clients? It's like, that's the easy part. I can tell you what ETFs to buy. I don't even know you. That's not the thing. This is the thing. And clients recognize that. And I think that's why financial planners are taking all of the AUM in the wealth management space, because there's true value to connecting people's actual lives with the portfolio holdings and putting those things together for somebody mathematically so that they can understand in those moments why they are living through what they're living through.
Yeah. There's a human side of it. Okay. You mentioned media. You've built basically a media empire of the podcast.
People keep saying that.
Okay, well, I'm going to say it for you. The Future Proof Festival, I have major FOMO after missing out for the last 4 years.
You're going to come to the next one, though.
Definitely going to come to the next one. Okay. Yeah. I need to find a big name guest. So
I feel like you could do it.
I think I could do it. I have some ideas. Like I'm going to do a big name if I can get. Yeah, I have my top 3.
Let's put you on the map at Future Proof.
Okay,
let's do it.
Let's do it.
Right.
But you started out when it was just blogging. There weren't that many people like. so curious about your just take on, maybe it'll be a bunch of questions here. The financial blogging world, is that over? It's just evolved more to
No,
podcast.
that doesn't exist anymore.
It doesn't exist anymore. Yeah, it was so fun back then. Even BI, business cluster stock back in the day. That was fun.
Yes, it was.
So, I'm really grateful I came up in that time. But the media side of it, I imagine that's also really important for building up clients, trust, communication.
Yeah. So if you think that this is a financial business and you don't know anything about people, it's a communications business. People make decisions based on who they like and who they trust, and they don't make decisions based on like calculations. So the important thing with what we're doing in the media is that we're communicating with existing clients. They don't have a meeting on the calendar every day with us, but things are happening every day, and they want accessibility to what we're thinking. And most of the time we're thinking, don't worry about it. And that's the message that we put out, but they still want that connection with the person who's managing their money. They want to know that we're paying attention. So we go out of our way to do, I think, some of the best financial content anyone's doing. We put a ton of heart and soul into it, and energy and effort and research. And I have a full-time staff of 7 people who are only working on the media side. And I've found that it's a really great retention tool, so that our clients, even if they're not talking to their advisor each day, they're getting our take on things versus someone else's, which could be the absolute wrong take in our opinion. So that's one. 2, to drive the future clientele, you have to make fans. So the content has a massive fan base, like millions of downloads and views every year, and getting bigger. Those people that enjoy our take on markets are all going to experience catalyst in their life that's going to make them say, I should probably get some help with my portfolio, or I should probably build a financial plan, or I should probably talk to somebody who knows what they're doing with tax, with insurance. We can't bring those catalysts about. There's no blog post I could write that's going to make people like, I want a financial advisor. Like, that's not how it works. Here's how it works. And these are the literal emails. Hey guys, been listening for 8 years. Bad news. My father passed away. I'm inheriting like way more money than I know what to do with, and I need some help. Hey guys, I just got a big promotion at work. I'm now making enough money that I can put something away in a portfolio, and I don't know where to begin. Hey guys, I've been a fan of Barry's since the early 2000s, and I've been self-directed, but I'm 72 years old. I don't know how many more years I have left. I don't want to spend them in front of a computer, and I'm worried that my spouse, when I pass, is going to inherit this thing with nobody to help. We get that one like all the time. These are people that have had a life event. I just sold a business. My kid's getting married. Something. I need help. If people have built up trust in us because we're consistent and we say what we mean and we put our feelings out there and our thoughts, we're front of mind. We may not be the advisor they hire, but we're in the conversation. And that is what we're building. And I think that's what a lot of advisors are now trying to build. We were early. We put more energy and effort into it. And as a result, like, for the next 20 years, the tail is very long.
Yeah. Where do you want to take it in 20 years?
I don't know. I don't look at what I do as labor. So I'm never like, oh, when do I get to stop doing this? So I hope that comes through. Yeah. It's hard work and it's serious. And we're not just talking about people's investments. This is people's lives. Like, this is not, it looks like a lot of fun, but it's not a joke. So I don't know that I can do this at the pace I'm doing it forever. But right now, like, this is when I wake up. This is the first thing I want to do. I love connecting with people that are trying to invest, and I love talking about the markets. And it's like it's my favorite thing in the world. So I'm not like, when does this end? I'm like, what else can we do?
Do you ever look back at like that young Josh Brown getting that $500 together to go to that conference, and then you're sitting on stage at Future Proof, 4,000 plus people in attendance? What goes through your mind? Yeah, it's
miraculous, and it's a lot of luck, and it's a lot of timing that I had no control over. Like really great things happen based on the timing for me. And I acknowledge that. Being on Twitter in March 2009, nobody else is on there.
Yeah.
So you become like the Twitter suggestion engine keeps pushing people to you because you've already established a following. Like there's compounding advantages in my industry. There's compounding advantages in media, social media. Like whatever the popular thing is now can become even more popular just by virtue of existing. Like, you know, that there's like so there's a lot of like really lucky things that have happened along the way. And I'm pretty honest about, you know, sharing that with people. It's not that I'm so great. I got lucky in a lot of regard, but I think the thing where it's not luck is I really care. So, and you know this, the people that you talk to who are the most successful people, they care a lot. Like there's nobody that's half in that's gotten to like a level of success. The people that you talk to that are at the top of their game, you probably agree, they tend to be like all in people.
Yeah.
So
I have to say, I've loved having you on, and I love your book. I love the lessons. I love listening to you, learning from you. I value your friendship. I value all of the abundance.
Don't make me cry on a Wednesday afternoon.
But I'm saying it was a big deal to us when we were like 22, getting linked out by, oh my gosh, Josh Brown linked. Like, it was cool. And it was awesome. And you've kind of seen a bunch of us come up in the space. Like we were just super young, and yeah.
The whole crew is doing great. Like, yeah. Like everyone is thriving. Like Lynette is living her best life. Sam Rowe is independent and running something that's growing every year. Joe Weisenthal's on Bloomberg. Like you're the Julia La Roche show. Everybody is doing what they were meant to be doing. And I was so lucky to have fallen in with our crew. And I think I was one of the few non-journalists that preferred the company of journalists to the company of Wall Street people. Fun.
Yeah. So. Well, we used to all go to the Gingerbread Man and stuff. And apparently you said the first time we met, somebody was icing Joe. Cannot remember
icing.
That. Somebody iced him with the Smirnoff Ice, allegedly.
Right.
But anyway, it's been a pleasure. I want to give you the final few minutes before you have to run. Any parting thoughts, anything that you'd like to leave this audience to think about?
So I'm glad you asked. I want to connect that last thing you said to a really big idea. And somebody who's a really great writer, Jack Rains. Do you know Jack?
I've not met him, but I know exactly who he is.
That's my next email. Okay. Jack Rains, who has blown up in the last 2 years, he's doing like market commentary for Gen Z. And he is Gen Z, but there's a lot of substance there. He just graduated Columbia Business School. Like it's serious, but it's hysterically funny. But Jack was talking about the asymmetry of putting yourself out there in the universe. So I did it via blogging. You're doing it on YouTube. Like everyone's got their medium, but like the asymmetry of just being like, this is who I am. And I want to share these insights with the world. If you're good at it and you can get a wide audience to pay attention to you, the things that can happen as a result of that are incredible relative to like the minor amount of risk that you're taking. That's the asymmetry. It's like, yeah, you're taking a little bit of risk putting yourself out there, but look what could develop from doing that professionally. It's mind-boggling. So that I feel like that applies to you and to me and to a lot of people that we know. So Jack wrote about this. I'm going to send you his column on this topic because it reminded me. Like I take a lot of shit from people like, oh, you said to buy this stock and it went down. All right, fine. I'm an asshole today. Okay. I understand what it's like to have a thick skin and to have people sniping, on Twitter, like whatever. I get all that. Why is that risk worth it? Because the upside is so asymmetric. The upside of like just being yourself and making a connection with the audience, it's insane what that could lead to when you go out there and do that. So I wanted to just bring that up because I think it's very apropos.
Yeah, I think you said that blogging saved you and you did it. It was personal. It was yours. And yeah, you would do it regardless of who was reading.
I think that's true.
Yeah. Well, Josh Brown, founder and CEO of Ritholtz Wealth Management, author of You Weren't Supposed to See That. Thank you so much for coming on the show. Really appreciate you.
Thank you so much, Julia.